So guys, basically at market open we had a strong selling pressure, okay, and we identified the key level, the 670 680 area, and we said if price gets back to this area we are going to look for a potential short. Okay, so price got back, as you can see, hits the key level. We got two rejection candles, that one pin bars, okay, and I entered a short position as soon as dip below my key level. Okay, however, and I put the stop loss right at 700 area, 30 points. So however, you can see that took over and I took my loss. Okay, the reason I'm making this video, in case you face this kind of scenarios when breaks out your key level, what you can do is to wait until breaks back below for another potential entry. Okay, so my point here is you shouldn't change your bias. As we saw, we are downtrending. Okay, as you can see it. All right, we are downtrending and we are looking to take short positions. Okay, because here you might think, okay, the key level is broken, retested, and I can look for a long opportunity, for a long position. However, in my opinion, you shouldn't change bias on the day if there is no clear reversal on the higher time frame. So that being said, in case the key level fails and takes you out, okay, all you can do, you keep your bias, short bias, and you wait patiently until breaks back below for another opportunity, or you walk away and you come back on the next day, right, when it's different scenarios. But if you really want to take advantage of the key level you identify, right, you shouldn't change bias. As we said, 670 680, let me show you, it's on the daily chart. It is yesterday's low, okay, and there are some open price in the past, right? So that's our key level, okay, and you can see the daily candle is bearish. Yes, it can push higher, but in the end anyway is going to fall. So that being said, we are looking to take a short opportunity, and I'm going to show you. If fails, you take your loss and you patiently wait until breaks below your key level, right? You can even scale in here if you are trading with more contracts. Okay, you can scale in a short position. You shouldn't add until breaks below the key level, right? So if you are using only one position, for example one contract or half contract, you should enter only when it breaks below the key level, right? But as I told you, you shouldn't change bias and you shouldn't get in long right here. Yes, it seems that breaks out and tries to hold this key level as support, but the higher chance is always that it's going to fall back. So you have to keep your bias. Okay, so you can see we have a downtrend right here, and what we expect is to fall back to this area. Okay, so as I told you, you can scale in and you add only when it breaks below your key level. Okay, you shouldn't change bias and jump in long just because the key level failed. I mean, the price pushed higher than your key level, right? Let's see if it's going to work out. We are going to take another shot below 670. This is valid also on the opposite side, of course. When it's uptrending, in case fails the support you want to buy, you are not going to jump in a short just because it goes below your key level. You wait patiently until it breaks back above and you long it. Okay, so in this case, as I told you, we are in downtrend. Higher time frame looks bearish, the daily candle is bearish. Okay, we had a strong selling at the open and basically we were waiting for a pullback. Okay, we got faked right here. Okay, the price pushed higher than our key level, we took our loss, and the next opportunity is when breaks below the key level, right? So we don't change bias, we keep going with the shorts, right? I'm going to add one more here, guys. And as I told you, if you have only one position, if you are planning, if you have a small account, you only enter when breaks below your key level, right? I'm going to add one more here, guys, and two more below 670. Right, guys, I'm going to add two more here and one more for extra. Okay, so now let's ride it. We have our stop loss, as we said. You are going to enter as soon as breaks back below your key level. Let's see if it's going to work out with a 30-point stop loss. So below 700, I'm going to mark for you that 700 area is our stop loss. Okay, and 610 is our take profit. Okay, so let's ride this, guys. Right, guys, so that's why it's important to hold on to your bias. Okay, as you can see, it falls nicely. Okay, we got faked out on the first entry, but we're going to recover on this one. Okay, and make some profit on top, of course. So there we go, guys. There we go. Let's see if we can hit the 610 key level so we can take our profit. Okay, right, guys, just retested the key level. What can I say? Let me show you. Hope you can see it. We are holding on. Let's see if it falls back from the key level. Alright, guys, we almost got stopped on this retracement. Okay, I already started to believe that it's going to take us out, and we missed to take the profit as well. However, as you can see, push back down all the way, so we are still holding. So this is a very good example why you should stick to your bias. Okay, so we basically held on to the shorts and we are nearly ready to take profit. We just need another dip to 610 area, as we said. Okay, we are being greedy here, guys, but let's see if it's going to work out. Going to pause this and get back to you as soon as we are ready to take the profit. Right, there it goes, guys. I'm getting ready to take my profit. Okay, so this was very long trade. Basically, we got in here, we almost got faked out again, right? And finally we are ready to take profit. 620 hit and just jumped away, but we are going to wait for a retest for 620 and we're gonna take our profit. Right, guys, so we need another dip and we will take our profit. Okay, hopefully it's not going to push back up. Okay, but I believe it's going to hit this area we are looking to take a profit, so we want to see another dip, right? And I'm going to buy back some here. Right, we closed half of our position. Close another one. Alright, that's it guys. I closed everything out. Okay, as it reached the 610, 620 key level. So that's the trade basically. Took too long, but definitely worth it. Okay, so it's a very good example guys. You shouldn't change your bias on the day. Okay, as you could see, a bearish daily candle I showed you before, the downtrend, we identified the key level, okay, and we kept our bias. Okay, it's just about to hit 610, we are out. Okay, we lock our profit, and as I told you, it's very important to keep the bias. Don't jump from bias to bias. All right, thanks guys for watching.